So here's something interesting that's been happening recently, and honestly, it feels like one of those situations where a strategy ends up doing the exact opposite of what it was supposed to do. We're talking about Donald Trump, Canada, and a series of events that are raising serious questions about trade, politics, and global relationships. Let's start with the bigger picture. Over the past few months, there's been a lot of tension in global politics, especially around trade and energy. Instead of calming things down or working closely with allies, Trump has taken a more aggressive approach. He's been criticizing partner countries, calling out their policies, and in some cases, even trying to pressure them into changing their decisions. On the surface, this might look like a strong negotiating strategy, but when you look at what's actually happening on the ground, things don't seem to be going exactly as planned. One of the most talked about situations right now is the issue of a major trade bridge between the United States and Canada. This might sound like a small thing at first, but it's actually a huge deal because these bridges are critical for trade between the two countries. For decades, the Ambassador Bridge was the main route for goods moving between the U.S. and Canada. It handled a massive amount of traffic and was considered the backbone of cross-border trade in that region. However, a new bridge was built by Canada called the Gordie Howe International Bridge. The purpose of this new bridge was simple: to modernize the trade route, reduce congestion, and create a more efficient system for moving goods. But here's where things get political. The owner of the Ambassador Bridge, a billionaire businessman, had a lot to lose if this new bridge became operational. More competition would mean less traffic and less revenue for his bridge. Now, according to reports, this billionaire donated a significant amount of money, around $1 million, to Trump's political organization. Not long after that, Trump publicly threatened to block the opening of the new Canadian-funded bridge unless the United States received some form of compensation. This raised a lot of eyebrows because it made it look like political influence might be playing a role in what should have been a straightforward infrastructure issue. But here's where things take a turn. Instead of protecting the older Ambassador Bridge, this move actually backfired. Businesses and truck drivers didn't just sit around waiting for decisions from politicians. They looked for alternatives, and they found them. Another crossing, the Blue Water Bridge, which had significantly lower tolls, suddenly became more attractive. As a result, traffic started shifting away from the Ambassador Bridge. For the first time in history, it lost its position as the busiest trade crossing between the U.S. and Canada. That's a big deal. And now, in response to losing customers, the Ambassador Bridge has been forced to cut its prices, something it hadn't done in years. This is where it gets really interesting from a practical point of view. No matter how much political pressure is applied, the market still responds to basic factors like cost and efficiency. If something is cheaper and easier, people will go for it. Trying to block competition doesn't always work, especially when alternatives already exist. Now, let's move to the second major development, which is even more surprising. During a recent visit to Canada, the president of Finland made a statement that caught a lot of attention. He suggested that Canada could, at least in theory, become part of the European Union or form a much deeper partnership with it. Now, realistically, Canada joining the EU is not something that's going to happen anytime soon. There are too many legal, geographical, and political complexities involved. But the fact that this idea is even being discussed publicly is very telling. It shows that countries are starting to think differently about their alliances. Canada has traditionally been very closely aligned with the United States, both economically and politically. But when tensions rise and relationships become uncertain, countries naturally start exploring other options. Strengthening ties with Europe could be one way for Canada to reduce its dependence on the U.S. and create more balance in its international relationships. From my perspective, this is a pretty natural reaction. No country wants to feel like it's being pressured or cornered. If that happens, the logical move is to diversify partnerships and build new alliances. And that's exactly what seems to be happening here, at least at the discussion level. Now, let's talk about the third and probably the biggest development in this whole situation, which involves a massive amount of money. A U.S. court recently ruled that certain tariffs imposed under Trump were not legally valid. These tariffs have been applied to goods from multiple countries, including Canada, China, and Mexico. Because of this ruling, the U.S. government is now required to return approximately $166 billion to businesses. Yes, you heard that right. $166 billion. That's an enormous amount of money, and it's creating a huge administrative challenge. The system currently in place is not equipped to handle such a large volume of refunds. Officials have already said that processing all these claims could take millions of work hours. In the meantime, many businesses are stuck waiting for money that they believe is rightfully theirs. Some companies are in such a difficult financial position that they are already using their expected refunds as collateral to secure loans. That gives you an idea of how serious the situation is. When businesses start depending on future refunds just to stay afloat, it shows that the impact of these policies goes far beyond politics. Another important point here is that this situation raises questions about how these tariffs were implemented in the first place. If a policy can be overturned in court on this scale, it suggests that there may have been legal weaknesses from the beginning, and when those weaknesses are exposed, the consequences can be extremely costly. When you step back and look at all three of these developments together, a clear pattern starts to emerge. Policies that were designed to apply pressure and protect national interests are, in some cases, leading to unintended consequences. Allies are exploring other partnerships, businesses are facing uncertainty, and major financial corrections are now required. In my opinion, this doesn't necessarily mean that every decision was wrong, but it does highlight the risks of taking an overly aggressive approach, especially when dealing with close allies. Strong policies can be effective, but they also need to be sustainable and legally sound. Otherwise, they can create more problems than they solve. At the end of the day, global relationships are built on trust and mutual benefit. If that balance is disrupted, even slightly, the effects can spread quickly across trade, politics, and the economy. And once that trust starts to weaken, it's not always easy to rebuild. So the big question going forward is simple. Will these strategies lead to stronger outcomes in the long run, or will they continue to push allies toward new partnerships and create more challenges down the line? That's something we'll have to watch closely. But for now, what we're seeing is a situation where pressure is not just being resisted, it's being redirected, and in some cases, it's coming back in ways that weren't expected at all. Anyway, that's the full breakdown in simple terms. Let me know what you think about all this. Do you see this as a smart long-term strategy, or does it feel like it's starting to backfire? Your opinion matters, so drop in the comments.